Hello my fellow freedom builders and welcome back to the channel. Now this is a short video about Tesla. Since Tesla are having earnings this week, I should say this video is recorded Sunday before the week due to a bit of holiday on my schedule. So there might be some slight differences when you actually watch this video Tuesday or Wednesday, but overall this should be fairly accurate. This video is about looking at the short, mid and long-term view on Tesla to see if it's a good swing trading candidate, if it's a good mid-term investment, or what about the long-term view on it. So first of all, if we look at the earnings calendar, and this is at dailyfx.com, I'm looking at the earnings calendar here, and I'm relying on their numbers to be accurate. I haven't checked them anywhere else, I should say. But we have Tesla down here, and that is on Wednesday the 19th of July, and as we can see, Tesla is in the after hours. Let's just have a quick look. Yes, here we go. We have it after the close. We have Tesla, and as you can see, the previous earnings per share was $2.27 per share, and the forecast this time is 0.79. So that is a drop. The interesting part, of course, in the short term is if they will beat the forecast. We can also see that the revenue, last time it was about $17 billion, and that is forecasted to be 24 billion. Now, just from these numbers, you can see that their margins are getting worse, because if they can put 50% on top of their normal revenue, if the forecast is correct, and they're cutting a lot of their earnings per share, that means that they are earning a lot less per every sale and every dollar they are getting in. But let's have a look at it. First of all, we go into the My Stock Scanner here. And on the very short term, we can look at the TPI chart to see, is Tesla a decent swing trading candidate? Now, first of all, we can see the earnings coming up here. And normally I would not take a swing trade just into the earnings. That is not how I trade, but I know some people are a bit more, they want to take on a bit more risk, and it could be that you're putting on a credit spread in options or something like that down here. So there could be some reasons for going in here. But looking at it, we can see that Tesla is in a long-term nice green trend, and we can see that they have been going down here on the weekly on the weekly TPI, but right now they are actually turning green. So there could be some ground for a swing trade here. Now, looking at it again, just quickly here in the summary, we can see that the return on capital, return on equity and operating margins, they are looking good, but the trend must be curving a bit down when we're looking at the numbers just a second ago in the earnings calendar. The Petrosky score is nice, that's a 6. There is basically no risk that Tesla is going bankrupt here, looking at the Altman C score, and the analyst estimates are just between hold and buy. If we're looking at it here, earnings per share growth, it is showing to drop a bit, but then it should pick up. We can see the profitability here is nice. We can see that the free cash flow is going up nicely. That is one of the things I really like to see in a stock, because that is the money they can actually use to either invest in new technologies or whatever, pay dividends or what they want to do with it. All right, you can dive into the numbers yourself, but basically on the short term, it could be an interesting swing trade. Now, looking at a bit of a longer term, and that is where we're looking 1 to 2 years out in the future, we are using the value chart here. Now, Tesla is a bit of a problematic stock, because the former numbers here, where it went from negative and all of a sudden accelerated, gave an average price earning over the last 10 years that was extremely high, 446. There will be a feature in this software in the near future where you can deselect some of the numbers if there are some outliers. For instance, this one here. There's a PE here at 1100 and 197, and that is of course some of the numbers that is skewing the data here. So I would like to go a bit closer The problem is that it is actually only the last 1 or 2 years where we have had some fairly normal numbers. So let's go into the 2-year range here, and we can see over the last 2 years it has had an average of 116 in PE. That is still high, but if the investors will keep paying 116 in price earning and their estimates are holding through, then we could go from just about below 300 here to 81 it is now, and up in the 550 range within the next couple of years. However, that is only if the estimates and forecasts are true, and if investors are willing to keep paying 116 in PE. Now, going in on a 1 year, you can actually see that it has dropped, depending a bit on if you're looking at a year on year or trailing 12 month or whatever you're looking at, but it is dropping. And if it is true that investors are only willing to pay a 34 PE on Tesla, then that it is extremely overvalued. And we are talking about the next couple of years here. It is up in the 281 range and should actually only be in 170, 60, 70-ish here. So if the estimates are true, and if the 31 price earning is the real number, it's not certain that it is, but if it is, then in a couple of years, everything else equals, it should only cost 160, meaning we should see a massive drop in the Tesla share. That is in the middle range look or view on Tesla. Going out on a longer term, we will look 10 years out in time. Now this feature here, actually the default here is 5%. This feature here will soon be in My Stock Scanner, but right now we're taking it here in Guru Focus that has a decent calculator here. This is something called the discounted cash flow, and that is where you're looking at how much do you actually want in yield on your money. So if you are buying the Tesla stock today, then you say, I want a 10% yield, meaning that the profit they are making are giving you a yield on your money invested. So if you want 10% in yield every single year the next 10 years, then what would be a fair value? Now, if over the next 10 years the growth rate in earnings per share is 5% per year, and I know some of you, especially if you're a big fan of Tesla, you would say 5%, that is ridiculous. It is going a lot higher than that. We'll have a look at that in a second. If the growth rate is 5%, then a fair value, if you were to receive a 10% yield from the profits every year the next 10 years, then you should actually only pay 42.45 for the Tesla share. Now, I know that you say, okay, 5%, that is way too little a number. So let's have a 10% growth rate. And remember, this is not just in the next year or two. This is the next 10 years. And I know some of you are saying, yeah, well, Tesla is going to grow forever, but they are probably not. Every time you see a company where investors or some of the fans are saying this is going to 10x, 100x, 1000x, then sometimes they will. I can't say that Tesla won't 10x or 50x because there are different hype factors. There's some bubble economic factors that may get in here. But if we are looking at the fundamental value of the company and we are saying that the earnings per share is growing by 10% per year, then a fair value right now would be $60, which is a lot lower, $220 lower than the current price. All right, what about 15%? Okay, then you would be able to pay 83%, and we can keep bumping this up. You can see if they were to grow 20% over the next 10 years, a fair value for you to pay right now would be $117. Actually, we need to get up to around 33% in growth rate over 10 years before it's just a fair value right now, and there's not even a margin of safety here. If we would be to say, let's say 40% every single year the next 10 years, then you would have a margin of safety of 36.5%, meaning you would be paying 281, but a fair value would actually be 443. So that would be a very nice margin of safety you would have here. Now, is 40% in growth rate per year realistic? I would say no. And this is not because I don't believe that Tesla has a great future, because I do. They have the charging stations, they have all sorts of tech. However, they are being chased by basically in the entire car motor industry. There are Toyota coming up with new solid state batteries. We have Honda coming with solid state batteries, which could mean, it's not certain that it will, but it could mean that the Tesla lithium ion batteries will be obsolete and they will have to make huge changes in their gigafactories, the battery producing facilities. There are 1,000 different or 1,000,000 different variables here that could go wrong for Tesla. I'm not saying that it will. I'm just saying that believing that a company will grow, let's say 35% every single year in earnings per share over the next 10 years, that is a bit far-fetched, to be honest. Could it happen? Yes, it could. Am I believing that it will happen? No, not really. I do think that there are companies where you're getting a much better deal if you are looking for the long term. And I think that betting on Tesla to be the one that could grow their earnings per share by 1/3 every single year for 10 years, that is, in my point of view, unrealistic. However, in shorter term, it could be a great investment. As I said, on the short term, could be an interesting swing trade. Earnings are coming, so it is a bit risky. In the mid-term range, I would say it's a bit risky. As we saw, there are definitely something here in the value chart that tells us this could be quite a lot overvalued. And looking at the discounted cash flow, I would definitely say that a 35 or 30 or even 25% growth every single year for 10 years, that is not particularly realistic, and that would mean that you have a negative margin of safety, meaning that at 281 you will be paying way too much for the stock. So the model could easily be wrong. It is a bit of a simplistic model, but I think it gives you a fairly good picture as to if Tesla is something you should invest in for the long term. Personally, I wouldn't, but as always, it's totally up to you. This is just as an inspiration and education into different models. So always use your own strategies, your own methods, your own thoughts about the future, and your own risk management. That's all for now. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye for now.